Good morning, good afternoon, everybody. My name is Scott Kelly. I'm calling from Las Vegas, Nevada today. I am actually at the CES conference, so I'm calling from my hotel room. We got pushed back a little bit. You know, the good news about hotels is they have internet. The bad news is you got to pay for the good internet. So I had to push back a few minutes to get that internet figured out. But welcome all to our VC Fast Pitch event. I'm going to share my screen and going to go over our agenda for today so you have an idea what's going on. So just bear with me. I will pull that up. And if you can see my screen, just give me a thumbs up. That would be great. I appreciate that. Okay, awesome. Thank you, Phil. Appreciate that. Let me do this. I'm just going to go through some notes for today. So again, welcome to today's VC Fast Pitch. I am Scott Kelly, your host, founder and CEO of Black Dog Venture Partners. And a couple of things. Our agenda today, like I'm doing right now, I'm going to go over our agenda. Right after this, I'm going to go around our virtual room and introduce our investor panelists. We've got some that have been here several times and many times. We've got some new ones. And so we're going to ask our investors to do two things, tell them a little bit about themselves, what they invest in, and how they invest. And then I want to hear from our investor panelists what they want to hear from our companies presenting today. And then we're going to go through our round of 5-minute company presentations. And then we'll have Q&A from our investor panelists. And at the end, we've got a great presentation. A good friend of mine, Derek Fahey, is going to do a short presentation on why startups should protect their IP. And then at the end, what tends to be one of the more enjoyable portions of the event outside of the pitches is the investors will give their feedback overall what they liked, and then we'll open up for our panel or our attendees to ask some questions to them. And then I'll have some closing remarks. We've got some great companies presenting today. We're going to start off in a few minutes with HighRewards presented by Josh Lamb, followed by Love. Then we've got Wave Array presented by Kevin Clemens. Blueprint Music by Phil Ryan. Apriority presented by Tony Willcox. Spot Fitness presented by Adam, my apologies. And then the Healthy Aging Company presented by Chris John. And then Shaun is going to present Shopraise. So we've got some great companies presenting today. So a couple things, some rules. Make sure your audio is muted. And thank you for doing that so far. We want to make sure that our entrepreneurs are uninterrupted. If you have a question, this is for our investor panelists, use your raise hand function. I'd really love the investor panelists to ask everybody that presents a question. So please take some notes while they're presenting and be prepared to give them some questions and feedback. But we'll start with 5-minute presentation, then approximately 5 minutes of Q&A from the investor panelist. If we have some extra time in between each presentation, we may open it up to the general public, but it's unlikely. Keep in mind too, if you're asking a question at any point in time, it's not an opportunity to pitch your company. I know we have several guests here kind of listening in and wanting to consider pitching at a future event. And don't post anything in the chat until I prompt you to do so. And as some of you have been in this event, you see this graphic almost every time, but I feel compelled to share it again. Finally, I always start by saying, show me the money. So with that, we're going to get started. I'm going to unshare my screen. And what I'm going to do is I'm going to throw up in chat our presenting companies in order of presentation. And then I'm going to hand it over to Josh in just a second. Okay. All right, Josh, you are up first. So for you and all our presenting companies, I'm going to be sitting right here with a 5-minute timer. And basically what's going to happen is I'm going to count you down 3, 2, 1. And then you get started running your own slides. Keep in mind in chat at 30 seconds, I'm going to put a 30-second warning in chat. And at 5 minutes exactly, I'm going to cut you off. If you've been in my event before, it's not 5:01, it's not 5:07, and God forbid it's not 6 minutes. So 5 minutes. After that, we'll open up for Q&A. So, Josh, you're the courageous being to go first. So I'm going to say, I can see your head a little bit on the bottom slide. That's a pretty cool effect. Kind of like, where's that? Where's Waldo? Yeah, exactly. So awesome.
Yeah.
All right, Josh, I'm going to count you
All
down.
right.
3, 2, 1, go.
Hi, everybody. I'm Josh Lamb, the CEO and co-founder of HighRewards, new marketplace for cannabis retail, and a beautiful app. Our seed raise has just begun. We're looking to raise $3 million at a $15 million post-money valuation. Just to give you a little background, the market opportunity with cannabis, it looks like it's going to achieve its $40 billion in sales revenue for 2024. It's exploding. It's over 71 million legal consumers, over 15,000 dispensaries now nationwide, and there is a cannabis program of some sort in all 47 states across the country. But with that, there's a lot of retail challenges. There's very high acquisition costs within the space, upwards of $300 for a new customer. Part of that is vastly limited marketing channels. Discount dependencies drives a lot of their sales, averaging over 30%. And we have that real-time data to prove that. And they lack real-time consumer insights. It's very, very distinctly separate between states, and there's very little data that aggregates across the country. Now, what is our solution? It's a pay per conversion marketplace. Our goal is to decrease the dependence on discounts. There's no upfront costs or technical integration that has to be done to work with us. We significantly lower acquisition costs up to 75%. And with our AI solutions we've been developing, we now have real-time retail market intelligence that's never been found in this space before. Now, the proof is in the numbers. Since we launched mainstream in October with both apps, we've seen over 2 million in receipts uploaded in total net sales. We've had over 22,000 store visits from our users, 33,000 receipts uploaded. And we've had every day we're adding about 500 new users at this point, and we've seen 1,700% growth in the last quarter alone with over 30,000 users. And if any of you all are familiar with app data and retention statistics, our 7 days at 42%, which is about 4x benchmark, and our 30-day retention is only rising, and we're at over 25%, quintupling the typical benchmark. So the product's working. Part of the reason we've been able to scale this with a very small team is we've developed what we kindly call CHAD, which is a real-time data and fraud prevention tool that helps us ingest receipts in real time. This is huge because there's non-standardization within the market, and nobody can do this at scale. And we're able to immediately take the data ingested by those receipts and start turning it into actionable information. Now, we've had tremendous interest for 2 of our revenue streams. That's our main focus: retail performance campaigns, which run at an 80% plus margin. And we also have passive income coming in through programmatic advertising, also at 80% plus margin. And both models scale with growth. We have over 25 partners in the pipeline. We have 2 of the top 5 dispensary chains currently signed up with us. We're looking to hit a pipe of 120K MRR by the end of July. We currently have an MRR that went from a few $100s starting in October to 20K as of now. Just to give you a quick background, so we work with Sunnyside was our launch partner. We launched in Illinois. They had a huge challenge with acquisition costs, very competitive market, limited marketing options. We instituted our first live campaign. And long story short, it's been wildly successful, excitedly, and we're hoping to expand to the other 10 states that they're also in. And we've driven an ROI of 35 to 1. And they love it because there's no upfront risk and guaranteed performance. The use of proceeds for the 3 million is going to go primarily toward user growth. Secondarily, we need some key hires for customer support, continuing sales expansion, and growth marketing, and then continuing investment into our AI technologies, including we're developing right now a dynamic points AI, which will individualize the offers to each individual, ideally making the most economic ways of delivering points for conversion. My background, Rob, who's on the call, and Shaun, we have over 50 years of experience in the retail marketing, advertising, and gamification and in the mobile space.
So Josh, why don't we keep that page up for now, and then why don't you go to the ask portion, and then we'll do some Q&A.
Yeah, so we're asking for $3 million at a $15 million post-money valuation.
Fantastic. Keep that up. I kind of did a little pivot, as you probably may have noticed. I know Josh had to go out there and close some more business. I want to get his presentation in there first, and then we're going to be going around the room and doing our investor intro. So I just made a short pivot just to accommodate Josh. But before we get to that, if you're one of our investor panelists and you have a question for Josh, use the raise hand function, and I'll call on you. So I have a first question for you, Josh. Talk about the current and possible short-term future landscape in your industry and how that can impact you.
Yeah, so we're positioned really well. Without federal legalization, we play a really important role because you have mainstream advertising channels that just are not going to deal with it, to be honest. So we're kind of shooting fish in a barrel right now. So as we grow the audience, we're in a really, really good position because there are no pay for performance channels in the space. Yet we're able to go around a lot of that and advertise in a more traditional sense through Meta and Google and so forth. So for us, it's really good. As it continues to loosen up and the markets continue to open, that only helps us as well, because more competition within the space between dispensary chains only improves our value add. Lastly, there's a huge opportunity for us to essentially, we're creating a new island in this marketplace to where we get to own the audience and the data itself. So we can really line ourselves in a position that's really hard to move us off of.
Great. Awesome. Thanks for that. If our investor panelist has a question, you can either unmute yourself and ask your question or raise your hand and I can call on you. Or if you like to, you can even post your question in chat. Go ahead, Phil. Using the old school hand.
So thanks so much, Josh. Very interesting presentation. When you look at the cannabis market, and has been very challenging, from an investment perspective, whether it's the agricultural growing facilities or dispensaries. Obviously, you're approaching it from a marketing perspective. Who are your major competitors out there? Are you aware of similar companies doing the same thing? And are you ahead of the game, behind the game, first to market? Or you do a little bit of sharing there?
Great question. So in the rewards space, in what we're doing, shopping retail rewards, we don't have any direct competition. I realized this when I was the CMO at I was the CMO at Shopkick. Then I was the CMO at a company called Leafwell in the cannabis space. And that's where I realized like an opportunity like this existed. You have companies that run on traditional advertising models like Weedmaps and Leafly. But those models are getting really crushed and the partners don't want to work with them anymore because they can't prove results. And per government regulations, until it gets rescheduled, they can't write off marketing costs. So every dollar needs to have an ROI attached to it. So that's part of the opportunity with it. There are reward systems. They're just B2B, meaning, it's like going into CVS and having your own internal rewards. So as far as having an agnostic platform that can work across states nationally, there's no one competing in our space right now. So we're a first mover in that sense. But they're proven models that we're leveraging from our experience, both through gamification and shopping rewards. And the other part of it is, as far as a moat goes as well, like a company like Shopkick, right? Like I was a CMO at, they're not entering the cannabis space because their main clients are Huggies, and that's just not going to coexist. So we have a nice runway there. Plus I have a lot of contacts there and they're just like, no, we're not getting into this right now. And as you pointed out, we're ancillary, so we do not have to abide by a lot of the rules and regulations that, you know, a cannabis related company has to, because we don't touch any product or any part of the supply chain directly.
Thanks, Josh. We got a question from David Freeman. David, you got a question? Go ahead.
Yeah, I thought it's very interesting. I've seen several rewards programs. I don't understand, maybe you can explain how you justify today, given where you are in your MRR, a 15 million post valuation?
Yeah. So yeah, we're growing really, really rapidly. We fully expect to get to at least 100 to 120,000 MRR in the next 6 months.
Yeah, that would still give me a 12x return on something that's future, not trailing, just to give you a hint on how we think.
Yeah, no, I can listen. It's not for everybody. It's just based on interest and the meetings we've taken so far.
How many do you have a lead investor right now? How much money have you gotten out of the 3 million?
So we just started. So we just closed the angel. We raised 725,000.
On what value?
5 million.
Yeah, it's hard to, I mean, be honest with you, just very blunt. It's really hard to go from 5 to 12 or to 15, you know, given where you are right now. So just to give you a hint.
Yeah, fair enough.
Use it or yeah, you take the information or not. It's just our angel group, which we'll explain later.
Yeah, and our lead investors, Carlos Hernandez, who is the executive vice chair of JP Morgan Chase and their investment bank. And so we're working with him as well on brokering this. So we're looking most likely at doing a bunch of family offices potentially. We are looking into some others depending on the check level. It's somewhat negotiable, but that's what we're going for right now.
Well, thanks. I wish you the best.
I appreciate
Thanks,
it.
Josh. Josh, if you can, once you throw your information in chat, you can unshare your screen. So
Great.
All
Happy.
right, we're going to go back to my original agenda now. So what I'm going to do is, David, you just took over the mic, so I'm going to give it to you again. So what I'm going to do now is I'm going to go around the room of our investors. If you are an investor, use the raise hand function if you can, so I don't forget you. What I'd like to do, obviously, David, you've done this before. Share a little bit about your organization, how you invest, what level, and then for all the other companies presenting, including Josh, talk about what you want to hear in a pitch today. So, David, I'll start with you. Go ahead, David.
Yeah, I'll try to make this short and fast. Name is David Friedman. I'm a prior tech executive, worked with some really iconic companies developing new products and services, did some startup work, came to TCA about 16 years ago, been an investor with TCA Orange County, became chairman of TCA Venture Group. We now have 7 networks underneath us in a variety of different areas, medical. We're big in medical, we're big in software, we're big in IoT, we're big in AI, we're big in devices, you know, and we've been consistently rated one of the top groups in the country. We have about 400 angel investors. What I'd like to hear is something that's showing discontinuous innovation and how you can sustain that differentiation long term. And I'm looking for value. As my comment indicated before, it has to be the valuation and the deal structure has to be in sync with the leadership team, the product market fit, and prior rounds of financing. Did I miss something?
No, you're good, David. Is that a new pair of glasses, David? It's the new frames.
Thank you. You noticed.
They look really good. I got to get a set like that. I got these I got these drugstore readers. I got to upgrade. You look good, David. Thanks for joining us.
Appreciate it. Thanks, Scotty.
So, Phil, you jumped in. You're new to this. So maybe, Phil Whitman, you can share a little bit about yourself, your firm, and talk about how you invest, and then maybe talk about what you want to hear today in presentations.
Sure. Thank you so much, Scott. As Scott mentioned, my first time here as a panelist. I'm the CEO of Whitman Transition Advisors. We're the single largest advisory organization for CPA firms in the nation, if not the world. We are very in tune with the private equity arena as it relates to business services. Typically, we will get most of the transactions that we work with through our CPA firm clients and through a network of managing partners of significant firms. We've got relationships with 60 of the top 100 firms in the country. We've got a total of 48 professionals that are part of our team, work with well over 3,000 or 4,000 CPA firms nationwide. I've invested in the cannabis arena. You know, Josh, I've got some introductions I'd like to make to you, some dispensaries that are part of our portfolio. We've invested in the medical device space. We've invested alongside the private equity groups that we work with in business services, and that includes MSPs, cybersecurity companies, obviously CPA firms, and wealth management funds. So,
what do you want to hear in the presentation today? What's going to be something that makes you want a second call, Phil?
So I like something that A, solves a problem, and B, just something that's really innovative, different, something that, you know, we haven't seen before. You know, and sometimes when I do see something I've seen before, like, and again, since I've only heard Josh so far, Josh, I do have some introductions to you. I don't know if you know Ben Patton and Travis Pompicello, but they've got a company called Greenscape Media. They have something, they're not doing anything with the rewards, but putting you guys together, I know some stuff can happen.
So Phil, why don't we take that offline after the call, but I appreciate you joining us.
Fantastic.
Thank you. Chris Piedmont, you there, Chris?
Yes, I am. How are you?
Awesome. Welcome, Chris.
All right,
Thanks for joining us. So maybe share a little bit about Neotero Capital, your firm, how you invest, and what you're looking for in presentations today.
Sure, happy to. And by the way, I want to apologize for missing the last several meetings. I know you guys do great companies and always like to be here, so I just want to get that out real quick. Yeah, so Chris Piedmont, Neotero Capital. I'm the founder and managing director of the firm. We're based in Austin, Texas. We're a little bit unusual in that we invest extremely early. We'll even invest at the formation of a company where it's just a few people with an idea and a plan. No geographic restrictions. We've even done stuff international. The couple markets I don't play in, unfortunately, cannabis is one of them. The other is crypto. But beyond that, we've done investments in medical device companies, B2B and B2C, SaaS applications, consumer product goods, and a variety of other things. I've even done a couple things in food. We usually set terms in lead, mostly because it's rare that someone gets in as early as we do, and they generally need the guidance. You know, David's point earlier on valuation is key to that, so I absolutely agree with what he said. Amount of money can vary anywhere from as little as $250,000 to up as much as $1 or $2 million. To date, we've done everything as special purpose investment vehicles, usually with high net worth individuals, family offices, occasionally small micro VCs. I am hoping to raise a fund of our own in 25 or maybe 26. We'll see if there's enough interest to do that. As far as what I like to see, it's in the name, Neotero, new territory. I'm looking for companies that have something new. New technology, new way of doing business, new markets. The element of the new is important. That's where the big opportunities generally arise out of. It's not the following of someone else. It's the creation of something new. So that's awesome. It. In addition to that, I like to see a plan all the way through exit, which a lot of guys lack. And the most important thing to me is the team. I want capable, competent, driven people that are not going to walk away. They're going to take advice and do everything they can to succeed.
All right. Thanks for that, Chris. Ed Lafferty. Ed, how you doing? You there? He's maybe muted.
Hey guys, doing great.
All right. Thanks for joining us, Ed. So share a little bit about your firm, what you're looking for,
Appreciate it.
and then we'll go from there.
Sure, Ed Lafferty. I am with Saturn Partners. We're a venture fund based out of St. Pete now. We were in Boston for 20 years. I started the firm back in 2001 with my partner. We have invested out of 3 funds. And right now we've got about 6 side funds, which kind of our model is to invest early through the funds, take the winners out and set up a side fund. And we co-invest in that side fund personally as well. So we also do some personal investing as well as some venture investing. We typically invest in 3 different areas. We're in health tech. We're also in advanced materials, and we're also in fintech. So those are where we like to focus. We've invested in other businesses. We typically like to stick to those 3, though. We tend to do a little better when we stick to what we do best.
Awesome.
So that's kind of my story.
What do you want to hear today that's going to prompt a second call?
Just to build on what the other guys have said so far, which is we really like to invest in strong management teams. We like to, in addition to strong, technologies with a moat and strong technologies and, large markets, those are the things kind of every VC wants. I agree with the last speaker. We want to see a strong management team that has a sense of urgency and get this done, and that are coachable as well. Life's too short sometimes to deal with some of these guys, and I'd rather work with guys that are fun and work hard and want to get stuff done.
That's awesome. Thank you for that. So let's see. I'm scrolling through now. Daniel Einhorn, you're new here. Daniel, why don't you share a bit about yourself and your firm, how you invest, and what do you want to hear today?
Sure. Dan Einhorn. I live in the North Shore of Milwaukee, Wisconsin. We're currently investing out of our fourth fund. It's a B2B SaaS fund. We invest in entrepreneurs that understand how to build a team, build a culture, build a industry level product that can really help marketplaces. We look for technologies that are going into markets that are underutilizing technology. And yes, we do focus on the manager. I tell all these CEOs when I first see them, hey, look, you have some technology here. That's all well and good. We're going to A, assume it works, and B, the better you think it is, the less interested we're going to be in your technology. So walk me through how you're going to market, how you getting, to the end line, and we can go from there.
Awesome. I appreciate that. I know we got some other investors going to be logging in as we go, but did I miss any other investors? Okay, Brian Neer, thank you. Brian Neer is a real trooper. He's actually on his class trip, I think, with one of his children, but he decided to jump in. So, Brian, why don't you share a bit about yourself and what you're looking for in investment pitches today?
Yeah, thanks, Scott. I appreciate you letting me do this without the camera on. And you're saving me from being a chaperone today, so thank you. So I'm the Chief Investment Officer at Near Venture Partners, seed through Series A stage venture fund, focused on fintech, focused on emerging markets, but with a fairly broad mandate. We can look at anything as long as it's not pure crypto, healthcare, or vice, which would include cannabis. Check size is 100 to 500,000. We're trying to build a portfolio of 200 investments over the next 5 or 6 years. We have 63 so far, net of 9 exits. And what I'm looking for today is just, the basics, clear, concise definition of what's the problem, what's the solution, why is it better, how much traction do you have, talk about the management team, and then, of course, a realistic valuation.
Fantastic. Thanks for that, Brian. And I've been a chaperone on many trips with my kids, so I definitely empathize with you. So did I miss any other investors? I know we got some coming on a little bit later, but I want to make sure I get everybody. And we'll take a break in between to introduce anyone else. So, all righty. Well, we got some other ones coming on as we go, so we'll jump into that later. So let's get back to our presentations. Our next presenter is going to be Terry Anderton at LVED. Terry, are you there?
Terry is here.
All righty, Terry. Why don't you do this? You've done this a couple of times, and you are a successful participant in previous events, raising some capital. So let's do this. I'm going to set my clock at 5 minutes. I'm going to count you down, and then just look in chat for a 30-second timer. 3, 2, 1, go.
Hi, everyone. Thanks, Scott, for allowing us to participate. Again, I know some of you have heard our pitch before, and you'll notice in this, we've augmented and changed a little bit about our go-to-market strategy. We're raising $2.5 million at a pre-money of $7.5 million. LVED is an estate planning platform leveraging AI that's really comprehensive. The market is huge. 50% of people don't even have a plan. $32 billion is left on the table every year in unnecessary taxes. People don't have proper planning, so they're not getting out of probate. And the other aspect, which is quite interesting and hits a younger demographic, is that 30% of all cryptocurrency is lost every year, or it has been lost due to the inability to access it because they've lost their password or they've passed away and haven't been able to transfer it. That's 660 billion out of the 2.2 trillion in cryptocurrency. Why is estate planning broken? It's a 200-year-old process. People get binders. They hate going to attorneys. Usually when you create documents, they're out of date shortly after you create them because it's a very dynamic, life is dynamic. You get married, you have children, you buy a new car. So a lot of these things are problems. Customers also would like to get advice and help from their current advisors. They don't like going to an attorney specifically. Insurance, tax, financial advisors are great places to help in this process. It's expensive, and that is also a barrier. So let me tell you real quickly about our team. My co-founder is Ryan Anderson. He's an MIT guy. He's got both master's and bachelor's in computer science, an MBA from MIT. I'm a serial entrepreneur. I've started many companies, created a security company after leaving McAfee, where I was an executive, and it ended up getting acquired by McAfee for $148 million. I took an e-learning company that I founded public, and most recently, I invented the world's first satellite-based dog collar, and that was acquired by Halo, Cesar Millan, the dog whisperer, in 2021. We're a very experienced team. We've built a group around us that's great. We have attorneys. One of my co-founders is a patent attorney. Our CTO is got 2 PhDs, one in machine learning, one in computer science. We're really focused on AI, augmented, and also machine learning. We make it very simple to create, execute, manage a meaningful plan. We have 2 models now. We have a DIY model, I'm sorry for the typo, that's direct to consumer. That's a smaller part of our business. We're really focused on the fully supported, and we call it Love Pro Live, working through wealth managers, CPAs, accountants, insurance brokers. The market itself overall is over $1 trillion. We focus, our total addressable market is 50 billion. That's the subsection of people that are focused on planning, grief support, building estate plans, all those different aspects. We also are tangentially involved in the insurance side, which I'll get into. So our process is very TurboTax-like. It's very easy to use. We have an iOS app. We're launching a desktop version right now. We are soup to nuts. We have everything from the legal documents. One of the key aspects that's very unique about us is we have a secure digital vault that stores everything from crypto, usernames, passwords. And what's different about us, we're not just a legal doc company, we actually help execute your plan. We will transfer your assets, transfer your passwords and usernames upon your death. And we can go into how that works. We also have a pro version, which we work with, as I said, wealth managers, insurance companies, things like that. So our go-to-market pricing is very inexpensive, $249 for an individual. That's as compared to going to an attorney and paying, say, $3,000, or $499 for a family plan, which gives 4 complete estate plans. The recurring on that is lower. It's $100 a year for the individual and $200 a year for group. We go to market as a SaaS company. Our pro version is $10,000 a year per seat, and that allows the financial advisor to give basically 50 estate plans to 50 clients. If they want more, they can buy more from us. Revenues, we hit our first revenue literally in Q4. We're a little over 2-year company. We expect to do about $3 million this year. Moving up, our goal is to hit 80 million within 5 years. And I've got a lot of experience building SaaS companies. We're really confident that we'll do that and look for a liquidity event for our investors. We've built a really good thing called Love Financial Network, which is an association.
Terry, I'm going to have to cut you off there. You can
Okay.
expand on this during Q&A. So why don't you just tell us the ask real quick, and then we'll jump into Q&A.
We're looking for $2.5 million at a $7.5 million pre-money. We think it's a very reasonable ask given the quality of the management team experience and where we're at as a company.
Okay, keep that screen up. So if our investors have questions, you can either raise your hand. We've got a raised hand coming up. I'm not sure who it is. Just unmute yourself and ask your question.
Yeah, this is David again. Yeah, I'm interested in this for a variety of reasons. What other products and services are you providing? I'm really trying to get a perspective on your roadmap. I do think your valuation makes sense if you're going to hit $3 million. I can buy into that part.
Yeah, thank you for the question. So kind of I would call it the base product set is soup to nuts, legal documents. We're legal in all 50 states. The secure vault, and we also you can store personal messages. We'll even make your last Facebook post. But on top of that, we're layering in Insurance, we just entered into a joint venture with this group, Tandem Financial, and we're working on licensing in all 50 states. So we can we're going to leverage AI to identify people's unique situation, and where there are gaps in their estate plan, offer products and services to fill those gaps. And we want to be more than just a once and done type of company. It's a very dynamic play. We want people to leverage the platform. We're going to monitor their basically give like a personal financial statement, help them set goals, achieve those goals, and provide, you know, guidance and also products and services along the way so that they can hit those goals.
Yeah, I can see you being more of a B2B play. I'm not sure if I would, if I'm an individual, pay for $100 per year just because once my estate plan, my documents, my trusts are done, you know, I kind of have, it's maybe me, but you know, I'm pretty smart about this shit, but I'm not sure other people would want to have the, you know, the SaaS model of every year paying $100 if nothing really happens. Just an FYI for me.
Yeah, we tend to agree with you, although Trust and Will, which is kind of a competitor, they're going public this year. They're claiming over 1 million subscribers on their platform, and they don't do it all the time. I will say we have a great group of investors that have come in from working with Scott, but also outside that. One of them is Whitman Advisors. We're excited to go through there. You know, Phil is helping us get into the CPA market. And then we also have Digital Expert Dojo is invested in our deal.
Oh yes, Scott. Yeah. Okay, good.
So anyway, just wanted to give a heads up on that.
Yeah, I'll send you a note in the chat box.
That'd be great. Thanks.
Thanks, Terry. Appreciate that. If you can unshare your screen, that would be great. So,
yep.
All right,
Sorry.
Kevin, are you there? Kevin Clemens?
Yep, I'm here.
All right, you got to see a few in action now. Now it's your turn. So, once you share your screen, get your screen ready. If you want to go into slideshow mode, that's perfect. Okay. Yep, that's perfect. Perfect. All right, I'm going to count you down 3, 2, 1 in just a moment. And just keep an eye on chat. I'm going to put a 30-second warning in chat, but I'm going to count you down. 3, 2, 1, go.
Well, hello, everyone. I'm Kevin Clemens from WaveArray, and we are a company with proven effective technology through customers' trials. And our products are ready for the market, and we are here seeking a safe investment to fuel the next stage of our growth. Boaters know the problem of biofouling all too well, but for those of you that don't know, biofouling is that nasty, unwanted growth on the bottom of your boat. The problem with biofouling is that it's a tremendous drag on the hull of a boat and reduces speed and maneuverability, as well as increasing fuel consumption. The bottom line for boaters is that biofouling increases their fuel costs and environmental impact. Now, present solutions are toxic anti-fouling paints, which are ineffective, costly, and pollute our seas. Additionally, they only slow the growth of biofouling and therefore still require regular cleanings to remove biofouling growth from underwater structures. WaveArray has developed a way to paint ultrasound energy onto boat hulls and underwater marine structures, effectively creating a moat of microscopic cavitation bubbles on the surface, preventing biofouling before it even starts. WaveArray is going to market by offering our product on a subscription basis to boaters and marinas. This year, our focus is on growing within the Florida market. Not only is this where we are based, but the warm waters here are ideal for biofouling growth. So boaters in Florida know all too well this problem. Our plan by 2028 is to cover all of coastal areas and then expand from there globally. We are addressing this $110+ billion global market opportunity. With a million slips in the US and 10 million worldwide, there is tremendous potential to solve this problem. in a better way for boaters and marina industry. Our current business plan shows that with only a modest penetration rate of 2.5% in the US alone, we can hit a highly profitable $67 million in revenue by 2028. Looking beyond that, there's potential to be a billion-dollar company as we expand across the globe. Waveray has assembled a perfect blend of disciplines needed to execute on this system. We have electrical engineers, system engineers, a marine biologist, supply chain, finance, and business development expertise. The founder and our CEO has had 2 successful exits and has led, excuse me, large organizations for multinational companies. So to kind of summarize where we're at, this is a huge market opportunity with billions of revenue potential, even with a modest penetration rates. Our solution is the only one that prevents biofouling from occurring to begin with. And anti-fouling paints, the primary solution in the market right now, are harmful to the environment and continue to be regulated by the EPA and other environmental organizations to reduce their effectiveness. So the door is opening for us to take over from the current solution. There are other competitors that are trying to use ultrasound energy to prevent biofouling, but they're all focused on internal solutions to the boat, which require modifications to the internal structure of the boat, which is a big no-no for a lot of the customers that we've spoken with. We have multiple technology patents and have several NSF grants that have fueled our growth so far. We have proven our technology with multiple customer trials and are currently converting them to paying customers. And we have products that are ready to go to market. We are raising a safe round to provide runway for market demonstration traction, setting the stage for a successful Series A later this year. So thank you very much for your time, and it's ready for questions. I'm ready for questions.
Thank you. If you have questions, investors, you can use the raise hand function and call on you. My question, well, first of all, maybe you have any, you have terms for the current round that you can share, or projected terms?
So we are still finalizing, excuse me, the exact discount that we'll be offering as part of the safe round, which would be the, what the discount is over the Series A that we're planning to raise later this year.
Okay. And maybe share a little bit of the go-to-market. I mean, are you going to go after, let's talk about the consumer side. Are you going to go directly to consumers about this? You're going to be working with marinas, boat manufacturers? What's your strategy there?
So initially, to start out, we'd be going directly to boaters and trying to reach them through various organizations that they belong to. We've had some success in locating our trial customers by providing presentations to marina, and therefore getting in front of a lot of the boaters that are in the marina. It's kind of hard to get through everything that we could talk about in a 5-minute presentation, but the other side of it too is working with marinas that would be that lease a lot of their slips, that would be able to add on our system to their leased slips, and therefore increase their revenue generated by each slip that has our system attached to it, and therefore also apply a green technology to their product offering and kind of.
So let's do this. Now, Brian has a couple of questions. Brian here put it in chat. He's in a loud place. Are you planning to distribute this yourself or license or sell the technology is the first question. And then secondly, maybe in layman's terms, just explain exactly how it works.
Gotcha. Okay, so first, For our initial product offerings, our plan is to offer it directly to customers. If you look at kind of our longer term plans, we would like to eventually develop an internal boat system for larger commercial vessels that don't spend as much time at dock. And for that technology, we would looking to be licensing that. So, and then
Yeah, okay.
and then to kind of explain basically how our technology works is there's an array of ultrasound transducers that are positioned on the dock or outside of the boat. And each of those nodes of ultrasound transducers create cavitation in the water that, as I mentioned, creates a bit of a moat. It's a kind of a barrier of microscopic bubbles on the surface that the ultrasound wave is bouncing off of. And that coating of ultrasound bubbles prevents the larvae and all of the early stages of the different forms of biofouling from latching on to that particular underwater surface, whether it's a boat hull or a dock pillar or other underwater
Well,
structures. Like
thanks for that. I'm not sure it cleared up the murkiness, but I appreciate that explanation.
Yeah.
So
yeah,
awesome. Well, why don't we
yeah.
do this?
If anybody's interested, we have a lot more detail we can get into on a further call.
Fantastic. Thank you for that, Kevin. Appreciate it. Thanks for the question. All right, our next presenter, you can unshare your screen, Kevin. That'd be great.
Yep.
It's going to be Phil Ryan. Phil, you there?
Yes, I'm here. I'll just share now.
Yep. Share your screen. You can go into slideshow mode if you want.
There we are.
All righty. All right. So I'm going to count you down 3, 2, 1 in just a moment. Make sure you're watching chat for a 30-second warning, but I'm going to count you down now. 3, 2, 1, go.
Hi guys, my name is Phil Ryan. I'm one of the co-founders of Blueprint Music. What we're looking to do is democratize the music industry through Web 2 infrastructure and traditional subscription-based model, and Web 3 growth through our Blueprint token. Now, a lot of the problems with the music industry and record labels is the artists are not getting treated fairly, and obviously the record labels keep a lot of the funds back themselves and the artists get very little in return. So what we're trying to do is connect the artist with the super fans directly within our platform like it's never been done before. Now, a lot of the labels across the globe right now are splitting up and becoming smaller companies, but from what we can understand is not one of them can figure out what to do with the super fans and how to harness them. So our plan is to bring in artists into our platform that can connect directly with the fans. The fans get to make all the decisions that the record labels currently make. Now, the benefits for the artists coming into our platform is we will split the subscription revenue straight down the middle with them. So the artist can actually earn circa $1 million a year without even releasing a song. There'll be a voting mechanism that involves the fans making the decision. So for example, artist wants to release a new song, it puts it into the app, push notifies to the subscribing members, multiple choice, A, B, C, the fans choose. Next stage, what kind of video shall we do? Again, multiple choice, A, B, C, the fans choose. Stage after that, what shall I wear, for example, in the video? The fans get to choose. And then beyond that, certain fans and higher paying members will be able to get involved in the production and so forth. Now, on top of this, we're also creating a Blueprint token to act as the currency within the ecosystem. That'll give us 2 markets. So we've got the traditional Web 2 subscription-based service market that we're going out to, but then we've got the crypto arena as well. So basically, we've got 2 marketing plans to obviously tackle both arenas. Now, with this in mind, we have just done a brand activation on tour with international boy band called Blue. The reason for that is Simon Webb, one of the members, is actually one of the co-founders of Blueprint. So they've just been touring in Italy. So we actually had 3 national newspapers following us around as part of the brand activation. when the fans were coming into the arena as part of our research and development, it was Blueprint on the stage and not Blue. So the feedback that we got across Italy from various different cities such as Milan, Rome, and Bari was just exceptional. So we think we're on the right tracks, and we've got the solution to what the problem is on the market. Now, when it comes to the Blueprint tokens, we think that market might be bigger than the subscription model itself. Even though the market is a 30 billion model, what we believe is the Blueprint token could go far beyond the valuation of what we expect Blueprint to be. Now, we've also been offered, once we get to a tier 1 exchange with Blueprint token, and this is further on down the line, we've been offered 75 million subscription facility from Gen New York, a George Soros-backed fund, but obviously we need to get there first. Now, originally we were looking for 3.2 million seed funding. Currently it's being funded by ourselves. However, we've just gone ahead and almost completed our MVP, so we've now reduced that to 2.5 million seed funding. If there's any questions, I'm happy to take them.
Awesome. For our investors has a question, you can raise the raise hand function, or you can throw it into chat. Phil, talk about the competitive landscape. I've been in and around the music business for probably 20 plus years, and I've actually have a gold record in the space. I mean, everyone's tried to build this model. How do you compare to other models that are out there, whether it be TikTok as an option, or Instagram, or Spotify? What is your competitive advantage over some of these competitors in the space?
Absolutely. So we believe the advantage is the people we've got on board within the company, especially Simon Webb, who's got direct access to people like 50 Cent and so forth that could obviously endorse us. We're not just doing a single Web2 subscription-based model and traditional finance. We're actually doing Web3 as well. So we believe by combining the two, we're a step ahead of what the competition is now. A lot of platforms out there, such as Spotify, for example, concentrate on streaming. So we're not doing streaming, we're doing downloading. And the reason for that is, if you take Snoop Dogg, he only got paid $46,000 for 1 billion streams, which doesn't sound very healthy. The reason we've chosen 10,000 subscribers per artist per jurisdiction, because for 10,000 downloads, it actually gets you into the charts. So the artists within our platform can actually get to #1 without radio play.
Great. Any other questions? We can raise your hand in chat, and we can ask those questions. The other question I have is, again, I'll share this question too. Obviously, you're outside of the U.S., but how do you see, how you're going to get into the U.S. market, utilizing the token with the current environment right now?
That helps, Scott. Obviously, we've had a chat before. You've got experience in that arena. Not to mention, one of our advisors to the board is a gentleman called Michael Dunn, who is actually a good friend of Simon Webb, obviously the co-founder, who's heavily involved in the US music industry as well.
Okay, awesome. Well, why don't we do this? If you can, Phil, why don't you throw your information in chat, and then you can unshare your screen. Next up is going to be Tony with Apriority. Tony, you there?
I am.
Awesome. Let me do this. I will count you down. 3, 2, 1. Look for a 30-second warning in chat. 3, 2, 1, go.
Awesome. Thanks, Scott. I'm Tony Willcox, CEO and co-founder of Apriority Financial. I'm going to run you through how we're making consumer debt as actively managed as investments. This is a pretty novel approach here. I think debt is the most under-optimized technical market in the world right now. There are 17 going on $18 trillion of debt in the consumer debt space that is being managed by borrowers. If anybody thinks that's a good idea, this pitch is not for you. Interest rates go up and down as much as up. And the last time interest rates dipped, only about half of the mortgage dollars bothered to refinance in COVID. This is a travesty, but it's not really a surprise when you look at busy people with busy lives trying to figure out whether they should go through the hurdles of checking interest rates in a painful market. This business got kicked off when I got told from Loan Depot that I needed to do a hard credit pull to check my interest rate. It is a travesty. It's ridiculous. So we built a platform that continuously scours interest rate markets intelligently structures debt holistically around an entire debt portfolio, and optimizes consumer debt on a push and notification-based service. As we got into this, we also found that the current system is pretty toxic in terms of cost. The average lead generation winds on about $30,000 of interest costs to today's average US mortgage. This is because customers need to be acquired by lenders. They end up buying leads from lead generators at a low conversion efficiency, and on average spend about $2,000 to $3,000 per close on customer acquisition cost. This is inflated into the margin tables, which brings the interest rates up about 1/3 of a point. Our system circumvents this entire ecosystem. We are eliminating lead generation pipelines in lending and converting it to a consumer-focused service. And this isn't altruistic. We get better rates than anybody. If you go on our site today, you'll get a lower rate than what Credit Karma can quote you for the exact same lender and the exact same product, because that lender needs to put margin tables in to replace their customer acquisition cost with LendingTree. They don't need to with us. But of course, if we're not making money on leads, how do we do it? We see debt management just like robo investments. We think debt should be as actively scanned and optimized as investment models. So we also like recurring revenue, and we're going to market with a B2B2C model where businesses pay for our services for their employees or clients. We render services to the individual through a consumer-facing web app, and the benefits brokers who sell this business earn a rev share of whatever the revenue is that flows into us. We've had a lot of traction in distribution in the last 2 months. We've got a closed signed contract with USI, who service 1 million individuals in the US. We are in advanced discussions with Alliant and about 7 of the top 12 benefits brokers in the US. These are Fortune 500 companies, super enthusiastic about adding this as one of their benefits to their portfolios. Again, it's the most under-optimized market in the world. Consumer debt, everybody's focusing on investments and 401ks, and nobody's looking at that first 20 years of employee life. Tons of other go-to-markets that I'll get into on a follow-up call, but we're starting with this one for a bunch of reasons. On the tech front, we're not just checking rates and sending out annoying emails. This is a full total amortization cost-based system where we're scouring designed debt, financially engineered loans around parameters in the market that exist that modify interest rates. And then we're running about 200 million scenarios for every time we check rates for consumers. They may or may not get a notification if there's a savings opportunity. So as a quick example, this person couldn't save money today with somebody else, but because we are scouring all of their loan products together holistically, we're finding ways to drop payments in 2 vehicles, which opens up debt to income thresholds, which creates eligibility to 15-year products that are invisible today. So $200,000 of savings can be hiding from today's marketplace, and we've got IP file to uncover this. We've built a product platform, launched, made revenue. We've got, I would say, the most relentless and motivated and driven team you will ever see, at least between the 2 co-founders here. We are going to see this thing through no matter which way the ship sails. We are absolutely adamant that making intelligent debt in a number of ways is going to help consumers in a huge way. We've raised about 1.4 million total to date. On this round, we're about halfway through it. 5 angel groups closed, lots of diligence. We're going to deliver 2 million of ARR, 20,000 users, 2 go-to-market channels. We've got a contract with real estate space and benefits broker space. So with that, I'll take questions.
Great. Thank you for that, Tony. So if you have a question, you can raise your hand in chat, or you can post it in chat if you like. Tony, obviously interest rates took a tick up the other day, obviously, and that's kind of affected the equity market. How does an increasing interest rate environment or even a decreasing interest environment impact your company?
Yeah. So in increasing interest rate markets, there's obviously fewer refinance opportunities. It depends on where folks originated the first loan. So the same optimization that we run on refinance models, we run on new loans. So if somebody's looking for a new mortgage in a high interest rate market, great. We can restructure other debt, find better opportunities, find better rates. That's pretty straightforward. And there's about $3 trillion of new debt originated each year, even in high interest rate markets. So huge space just to tackle that. But our key bread and butter is to get eyes on markets continuously for folks so that whenever they did take out that loan in the last couple of years, interest rates dip, we can alert them to the savings opportunities that exist.
Okay.
So Tony,
jump in.
Yeah, B2B to C is obviously a challenging market. So first of all, how do you compensate that initial B2B relationship, and then how do they garner the benefit by introducing this to their customer base? Because that eliminates some of your marketing spend to have you know who you are.
Yeah, so we're actually intending to have pretty low marketing spend, because when we rev share to the benefits brokers, they can deal with marketing this in or lumping it in or bundling it according to them. So there's not any spend from the benefits broker perspective. As they sell to the businesses, there's obviously a cost. That's where the cost gets carried. And we see this as a tool to leverage things like highly compensated employee testing. We're looking at matching overpayment on debt vehicles for businesses. We're looking at supporting the bottom end, the other half or the other 2/3 of the workforce that doesn't have the ability to get to a 401k policy. So there are a lot of financial wellness and general mental health and productivity based value propositions that follow mental health wellness for businesses that they would buy, but that's what they're paying for.
Yeah, no, that makes sense. Look, I'd like to learn more about this. I threw my email into the chat box here so you can take a look. When you're dealing with because we've had deals like this where we dealt with Gallagher, dealt with M3 Finance, and getting it to like the right guy there has always been the challenge, right? You'll have like the guy that you're selling to, but then for him to get it up through the chain to his bosses to really promote this and get it through the organization, that's really where the challenges have come in. So love to just
You're right.
hear your thoughts.
You're right. We've had a LOI with USI for about 6 months now. We're headed down at the end of this month to start selling to their businesses in the Kansas City office. But you're right, these are longer timelines. We are anticipating putting revenue on for businesses in the next quarter, in the next month almost if we push. So yes.
Yeah, shoot me an email so I can get a fuller pitch.
Tony, Ed Lafferty here from Saturn Capital. I've got a question about the customer experience. Can you tell me how the customer experience, or what the customer experience is from onboarding and throughout while they're signed up with you? I mean, how does it work as the customer?
Yeah. So we have it's like a Plaid for debt connection. So when you log into our platform, you get an access code or an email code, two-factor authenticate, validate your email exists. And then with a text message, we have access to all of your loans, balances, interest rates, payments, et cetera, and it's live. So we keep track of balances as they reduce. And we've got about 5 or 6 questions that we ask per loan category, like what address is this mortgage associated with? If you have a student loan, what's the highest degree you have? If you have an auto loan, year, make, model, trim, and then they're done. They land on a dashboard, which is changing every day. But it shows them, are your loans above market or not? Can you save today? If they are above market, we show opportunities to save immediately. And you can layer into these. I can show some demos, but basically our goal is to put on the dashboard a debt health checkup, an overpayment credit card utilization, and hacks at breaking credit score in, whether there are savings or not. And then behind the scenes, as you click in, you'll find really clever ways of how to access savings that aren't done today. Like we're not scanning one loan amount for each loan. We're scanning 5 or 6 loan amounts around loan to value tiers in mortgages or debt to income thresholds with other restructuring processes. So
got it. So is your program advanced enough to know that perhaps rates aren't just lower in student loans, but I could also perhaps get a second mortgage on my house and pay those off at a better rate? I mean, is it more holistic than just looking at the segment?
yes. So right now we're not yet quoting second mortgages automatically, but that's
just an example.
You're totally right. Yes, we are quoting all of the loans in all of the dimensions that interest rates get modified. So this could be at different credit scores to show you're 6 points away from a dip in interest rates. It could be at different loan amounts to say you're 10,000 away from a jumbo loan, which is 1/3 of a point lower than the conforming. So yeah, we survey all those, and then when we calculate eligibility, we calculate it considering restructuring of other loans. It's a 200 million quotes. So we're looking at if you took a longer auto or student, would that create an opportunity to save or open up eligibility in another criteria? So we're standing back as holistically as possible. Eventually, we'll have this all baked into tax incentivized costs and post-tax costs and things like that. But it's just sit back, do basic finance logic, on how to minimize total cost of debt.
Great. Sounds good.
Awesome.
Thanks, Tony.
Hey, great presentation, Tony. I appreciate that. And I know there's several on this call that aren't just investors, but potential partners based on your go-to-market, and I'll let them self-identify after the call. But if you can throw your contact information in the chat, that'd be great. And then next up, we have got Adam from Spot Fitness. Adam, you there?
Yes. Thank you for having me, Scott.
Awesome.
Share my screen.
All right, I'm going to count you down. I'll put 30 seconds in chat while we're there. All righty, 3, 2, 1, go.
Again, thank you guys for having me. I'm Adam Ben-Evi, CEO at Spot. At Spot, we're building the active lead generator for health and fitness businesses, connecting customers with over 30 different sports and fitness activities and locations near them. So most businesses in the sports and fitness and wellness space, they pay for marketing by impressions or an annual marketing contract. But they really get frustrated because they don't know how to really tie their ad spend directly with revenue. So as one of 170 businesses that are currently working with us, Victory Martial Arts, for example, they spend thousands of dollars across all their locations. And again, they don't know how to tie where their customers are coming from. And also they lose retention. They lose 50% of their members once there's their first belt promotion, when their customer gets like to the white belt, the black belt, and they go so on. So that's where Spot comes in, the secret sauce. Basically, we help these businesses gain more exposure on our platform. We help them host their events and activities, which help them generate more leads. And then really the exclusive deals, which is basically the Prospect AI lead funnel that we built for them to hyper-target their exclusive deals to our users. Our lead AI model disrupts the market by providing basically a no-risk performance-based channel for them to be able to acquire customers. Victory Martial Arts pays us every time one of our users walks in the door and converts. We get $59 for every time that user walks in. And what's great about this is it's no risk to them. They basically pay us for one of our users converting for the first month. And we're able to now also get that lead for 10% of what they were paying before. So we got in for the pilot that we launched 102 users for them for $9.80. And before they were paying about $100 to get those people into their door. Not only that, through our extended network, we can also serve our Prospect AI ads to multiple other apps out there, over 13,000 of them, like Major League Baseball, ESPN, MyFitnessPal, Sports Illustrated. And so we are building on that extended network. Now, it's ambitious vision, but we have the team to execute on this. Our team knows how to build habit-forming apps. We've done this and worked with companies like Fox, Comcast, Televisa. Collectively, we have over 10 exits under our belt as a team. And because we have such a strong team that knows how to build these kind of apps, we're able to pull in some amazing advisors, investors, like the former CEO and founder of Priceline.com, who is like a godfather in the two-sided network. We have branding experts on our team from Men's Health and Sports Illustrated, and Professor Christakis, who runs the Human Nature Lab in Yale. A lot of his research went into what we built at Spot. Since launching Spot, we've seen some amazing results on both sides of it. Retention is a core pain point in this industry, especially in the fitness app market space. We see typically 96% of the people churn after 30 days, and we're seeing already 6 times the industry average, and we're just getting started. We have a 4.9 star rating on the App Store and the Google Play Store. And when our users are coming into the platform, they are selecting at least 6 different fitness activities. So with this day and age, nobody wants to go out there and download 6 different sports and fitness apps to participate in those different types of activities. We are that one-stop shop. And our users can find 3,000 different locations to date across the 10 counties in our launch area, helping them find also some paying customers that work with us, like Mayweather Boxing, Anytime Fitness, Urban Air. This wide scope and quality of product really helps our users find that one-stop place to help them find the best places near them to go out and get active. Right now, we're in need of $165,000 to close out the first tranche of our pre-seed round. We broke it up into 2 tranches, 1.7 million, broke it up into 2. And really that money is going to go into building out on the ad model that we built with these clients like Orange Theory, Victory Martial Arts, and Anytime Fitness. In closing, Spot is redefining community engagement, working with these sports and fitness and wellness businesses. And as evidenced by our strong App Store ratings, we won 2nd place at Freedom Fest, where we won a cash prize. The Orlando Business Journal recently selected us as a top startup to watch. We were Best Experience Award in Tampa at the Synapse Convention. And we just graduated, started a studio, and actually got an investment from them as well. Right now, with the funds that we're raising, we're going to use it to build on these ad campaigns for these companies, and where we generate revenue through the leads we bring into the door. I'm open to any questions. Thank you for your time.
Great. Thanks, Adam, for that. If you have a question, you can either raise your hand in chat or throw it into chat, and or for some of you, just open up your mic and ask. Question to you, Adam. Obviously, this has to be scalable, on a large geographic, reach. What's your plan to go beyond, the Florida market in terms of making this something where anyone can use anywhere in the country?
Yeah, you really got to hit the network effects, and a lot of these kind of businesses hit the cold start problem. So it's really important to focus on a small area and then grow from there, and building relationships with larger brands like Orange Theory, like Victor Martial Arts that has 50 locations nationwide. It allows us to open up other markets. We reward the businesses as they bring users in as well. So one of the offers is when they bring in users for people to download the app at their locations, to leave them a 5-star review or leave them a review for that location on the app. We also give them back ad credit for that. Cost per acquisition usually in this space is about $5.50. And when we can give a business a $2 ad credit, that brings our cost of acquisition below $2.50. And it's a win-win for both of us.
We have questions. You can answer them in chat or jump in. All right. Adam, thanks for the presentation. Appreciate it. If you can, throw your contact information in chat.
Thank you very much.
Thank you. And then Christian, are you there? I don't know if your mic is muted out. I can't hear you, Christian, but once you get your screen into slideshow mode. Can you hear me, Christian? Click slideshow on the top.
Okay, can you hear me?
I can hear you now. Yeah. You want to put your presentation in slideshow mode?
Do you have it?
I see your screen, but I see all your slides. If you go on there you go. Awesome. Right, now you're set to go. All right, Christian, I'm going to count you down 3, 2, 1. I'll put a 30-second warning in chat. 3, 2, 1, go.
Thank you very much. So I'm Christian Brechot, the chairman and founder of the Healthy Aging Company, which develops a new molecule for the treatment of diabetes complication, especially diabetic neuropathy and cognitive disorders. We are raising 5 million. We already got 1 to 2, and the exit strategy is foreseen in 2028 through licensing or acquisition after a clinical phase 1 to end that we are shaping now. So our company is based in the US, University of South Florida in Tampa, and in France. It's fully owned by the co-founders. And we are addressing the major issue of complications of diabetes. On the left, diabetic neuropathy, sometimes underappreciated, 30 to 50% of patients have these dreadful complications, which is still an unmet medical need. And on the right, cognitive decline, more than 80% of patients with Alzheimer's have type 2 diabetes. So this is obviously a huge market opportunity, be for the anti-aging market as a whole, dementia, diabetes, and diabetic neuropathy specifically. So our solution, this is a new molecule, new mechanism of action, complementary, and this is a key word, to the existing treatments, directly targeting the resistance to insulin, anti-inflammatory, metabolic activities, reduce fat mass and triglycerides, stimulates glucose uptake in muscles, and promotes tissue repair and healing. The basis of the proposals is excellent and detailed preclinical data on the treatment of diabetic peripheral neuropathy and cognitive disorders in models of Alzheimer's. So the point we make, and this is the position of our treatment, is that we can complement the GLP-1 receptor agonist. Of course, on the left, they have revolutionized the treatment of diabetes, but still they show some muscular side effects and they show limited efficacy, if any, on diabetic neuropathy and Alzheimer. On the right, our molecule, named ALF5755, restores sensitivity to insulin, improves directly neuronal functions, and improves cognition. And we advocate for combining the two molecules. We have a very good portfolio. We have a very interesting team merging myself. I'm presently a professor at the University of South Florida. Gilles and Paul Almoulal are both MD and very successful entrepreneurs. Christophe Magnan is a highly renowned scientist. We have advisors for development, commercialization. We have scientific consultants, Aurélie Joly, who is on the call for neuroscience. We have a very high-level advisory board for diabetes and for neurodegenerative disease, and they are very supportive. So the path to development is very clear. On the left part, and this is a key point to understand, previously, with exactly the same molecule, we were able to run first phase 1 and 2 clinical studies in patients with hepatitis B-related acute liver failure. And we did get some evidence for biological activity. So we know how to produce, we know how to be compliant with regulatory requests. We have safety data in humans, which is very rare. So on the right, the path for development, well, the first 5 million will allow us to get the IND, everything shaped, initiate the study. The value of the company will very much be increased. We will get to the phase 1/2A with subsequent funding. And as I said, we foresee partnerships and acquisition as the exit strategy. So to close, of course, this is clinical study, so you always have risk. But from the top to the bottom, we have proven safety and efficacy in previous clinical studies, which is rare. We have a first-in-class drug candidate, world-class team. We target a huge potential, and we have all the IP and every document. Thank you.
Awesome. Thank you, Christian. You got plenty of time left. If you have questions, please either raise your hand in chat or throw them into chat. And I know Ed and a few others are in the space and saw your presentation before. Maybe you could share, because you presented before, maybe share a little bit of traction, some things that have happened over the course of the last, couple of months in terms of development of the technology, the go-to-market, the business, etc.
Yeah, that's of course the key question. Well, I would say first that we have been able, and really thanks also to all the work from Aurélie Joly-Amado and the team, to very much solidify all the data we have on neuropathy and on Alzheimer models. That's really one point. The second, as indicated, we have established the first contact regarding a financial support, which will range from 1 to 2 million from investors. They do not want to be the lead investors. They cannot do that, but they absolutely are interested in this. So I think that what we have been doing is really to initiate a number of contacts, again, solidify the study. I should add that we have had previously a first contact with the FDA in a pre-IND meeting, which was very encouraging, based actually on all the data on safety that I have mentioned regarding a previous study. So this is really what has been going on.
Great. Any questions for Christian in chat? If you can ask them now, or you can raise their hand in chat. Christian, I saw your go-to-market. Your plan is not necessarily to go all the way to market with this. Your plan is to hand this off to somebody else. Is that correct?
Absolutely. When we will have run the phase 1/2A study, and this is important to understand, that we will have demonstrated the safety of the molecules in those patients with diabetic neuropathy and also with Alzheimer. When we will have demonstrated this and obtained some first preliminary evidence, even preliminary, for efficacy, all the advisors clearly emphasize that we will become extremely interesting for large pharmas because these are still unmet medical needs. So the idea is after the phase 1/2A, we will go for licensing or acquisition, possibly by a pharma. We will stop there. It's not our job to run a large phase 2 and then phase 3 clinical studies.
Right. Thank you for that. Christian, if you can put your information in chat, that would be great. We've got 2 more presentations. Next up, we'll have Shaun from Shopraise, and then we'll have Derek present on the IP side, short presentation. And then we're going to have some Q&A and feedback from our investor panel. So I would definitely recommend to stick around for that. So Shaun, are you there?
Yep, absolutely. Can you hear me?
I can hear just fine. All right, I'm going to count you down 3, 2, 1, and look for a 30-second warning in chat.
You got it.
3, 2, 1, go.
All right. Again, thank you so much. I'm excited to tell you about the story of Shopraise. We're the technology platform that harnesses the power of shopping for good. So again, the charitable industry has actually got a big problem right now. They're facing a future of fewer donors and shrinking donations. So as of today, 88% of all donations are coming from only 12% of donors. So again, why is that a problem? Well, the current fundraising model is based on direct donations. And while 84% of the younger generation is highly engaged with their cause, the vast majority of people just don't have the funds to give. And charities are now in need of a new way to monetize this new generation. So again, here's a solution. Every single day, people are making online and offline transactions. So again, what if I told you there was a way to take a portion of each purchase and direct it to the cause of your choice? So you don't pay any more for the items you buy. You get to use the same great coupons and deals. Oh, and by the way, it's free for everyone to use. So again, I'd like to reintroduce Shopraise. We're the technology platform that combines the act of shopping with the act of giving. So the Shopraise program leverages the strong emotional connection between the supporter and their cause. That's what gets people to use it. We tap into over 12,000 retailer programs that allow us to monetize the everyday shopping experience. And of course, that's in order to turn supporters' daily shopping into donations for their cause. And we call this entire process shopping with purpose. The Shopraise platform provides, again, a simple, easy, and free way to turn everyday shopping into support for your cause. We have a mobile app, a browser plugin, and an online mall. That's our platform, which allows us to dynamically combine that act of shopping with the act of giving. Supporters literally just have to download the Shopraise app, and then our automated system helps them monetize eligible transactions, which again, Shopraise then splits with the cause. So currently, we have over 12,000 retailer partnerships. As of last year, we only had 1,500. We grew it almost 10x, which we're really excited about. And they include places like Starbucks, Walmart, Target, Home Depot, Amazon. I mean, basically any place that people are shopping. We're also expanding out our absolutely fantastic grocery store program. We're just about to announce places like Kroger and stuff like that. So it's kind of a preview, which is really fantastic. Again, the places where people are shopping right now. As for the market size, there's over 59 million households that donate to a charity and almost $3,000 of eligible monthly purchases that we can tap into. And again, what this means is that there's almost $200 billion of potential revenue in this industry. So whether it's in-store or online, we're able to monetize that everyday retail transaction. And we have multiple revenue streams that are based on our existing retailer programs. That includes our affiliate marketing program, as well as our gift card sale program. And we make it as easy as a click of a button. So when you're thinking about how much we can generate, right now we're generating almost $1,800 in revenue per user annually. And the main reason is because people are shopping already. We're just monetizing what they're already doing. So as for our competition, in 2023, Amazon Smile closed down. So that means that we're one of the only players in this uncontested market space. There are really 3 things that make up our advantage. The first thing is our platform, which is absolutely fantastic. But we've also locked down some really critical relationships within the industry, including industry partners, integrations, and we're expanding that partnership program out. We also have our supporter retention model, which again focuses on creating sticky relationships with our customers. So speaking of sticky relationships, as for traction, with almost no advertising, we've been able to significantly we've seen significant user engagement. We've had over 3.5 transactions per user on a monthly basis. They're generating over $140 in revenue per month. Last year, we had over 11,000 transactions, and we generated nearly $500,000 in revenue. We have an MRR of over 36K on average in 2024. We are a little bit cyclical. In December, we had almost 60K in revenue, which was fantastic. We've also signed up hundreds of nonprofit partners, including places like Leukemia and Lymphoma Society, March of Dimes, and some Chapters United Way. With this, again, looking at growth, we've really proven that we can significantly scale with very little investment. And we're expecting to reach $5 million in revenue by the end of 2025 and over $200 million in revenue by the end of 2028. And the reason why we're able to do that is because there's almost 2.5 million nonprofits we can tap into. And we also have some other cool programs that we're going to be rolling out as well. So speaking of team, again, our team, we have over 100 years of experience in the nonprofit fundraising and tech development space. I know one of the investors said, that technology is great, but, the team is better. We have a fantastic team. We're driven. We're ready to go. We're ready to succeed. And that's what we've been doing. So don't take my word for it. Look at what we've done. So up to this point, we've been 100% founder funded. You look, we already put $2 million into the business. The main reason is this is a platform. You can't start it unless you have the whole thing. So we have the platform done. We're just making it better as we go along. We're looking for $1 million of investment for a 20% equity stake in our company. That's a $5 million post-investment market cap. And what that means is that we're going to be focusing all this money on growth. That's marketing, getting out there, increasing our user base, and then, continuing our fantastic results. And what our goal is, we're going to be looking at about a 20 times increase in valuation, all things going well, by the end of year 4. I know everybody wants that 10x. We want to be able to double that because, hey, I want to make a lot of money as well. So,
awesome.
Again, here, what we're looking at is that Shopraise, we have everything we need to succeed. We have the team, we have the product, we have the proven model, we're ready to go. So
awesome.
I'd love for you to be a part of it. Any questions? I'd love to answer them for you.
Great. If you have a question, if you have a question, please raise your hand in chat or throw your question in chat. Shaun, obviously, you're covering one pain point for nonprofits, and we've shared a little bit about some of the things you have on the pipeline. What are some other pain points that you can solve for nonprofits out there in the marketplace?
Sure. So we actually have, 2 other products that we're rolling out that, again, help us monetize our entire model. So the first one is, if you're a nonprofit, you have a lot of expenditures. You're doing things like office supplies, you have materials, you're doing events. We're actually rolling out a program where we're going to actually help nonprofits monetize those expenditures as well. So on average, a small business like a small nonprofit is going to be spending about $300 a month just on office supplies alone. That's a way where we're actually helping them, get some of that money back on everything that they purchase. It's kind of the same thing as well with small businesses. We're actually in the midst of rolling out a brand new small business workplace giving platform. There's a lot of small businesses out there, over 36 million of them, that will never buy a workplace giving platform. And they have a lot of teams and clubs that are trying to, that solicit donations from them. So what we're doing, again, same type of concept, monetizing all of their expenditures and allowing them to build up a fund so they can then donate. So perfect example is like, if you're a construction company, you get all the great discounts and deals by going to Home Depot and having the contractor agreement. With our program, you can use our program with that same program. And if you're spending $10,000, $20,000, $30,000 a year on just materials, you can actually generate a ton of money that then you can then donate to whatever cause that you want to. So it's pretty exciting.
Awesome. Thank you for that, Shaun. Shaun, if you can, you can put your hand, put your contact information in chat. I appreciate that. Yeah,
awesome.
No, it's been interesting so far. While we've been on this call, I've actually been seeing several emails already between entrepreneurs and investors looking to connect. So it's nice that it's happening in real time. So I'm excited about that. So, but thanks for all the companies that presented today. And so I bring in a special friend of mine, Derek Fahey. He's been an IP attorney specializing in helping entrepreneurs protect their intellectual property. And so I wanted to bring him on today and just share a little for entrepreneurs today. Our presentation is, quite simply, why is it important to protect your IP? So, and then after Derek's done, we'll open up the Q&A to our investor panel and get some feedback from them. So with that, Derek, thanks for joining us, and feel free to begin anytime.
Great. So, why should startups protect their IP? So first off, my name is Derek Fahey. I'm a registered patent attorney with the Plus IP firm. We specialize in software, medtech, and cannabis-related technologies. And I'm going to give you the answer straight right away. Short answer is straight cash, homie. In the famous words of Randy Moss, NFL wide receiver, taking a page out of Scott's book, right? So straight cash only. The answer really, most of it is really money, right? The reason why we want to protect IP is because of money. Let's be frank about it. But what is actually intellectual property, right? The concept of intellectual property, in my words, really is if you create unique, innovative technology or ideas, you should own the rights to it. You know, if you create great stuff, you should own it. And one of the challenges with creating unique and great stuff is if you have nice stuff, people are going to take it. So you got to protect it. Now, there's different types of intellectual property for startups or for any business, quite frankly. And IP consists of really four main types. We have patents, copyrights, trademarks, and trade secrets. Every single business has at least one of these types of intellectual property. Patents protect inventions and processes, software. Copyrights protect different works and artwork and music, software code, photographs. Trademarks protect your brands. Trade dress protects, which is a form of trademark law, protects cool, unique packaging. The green jacket is an example of a great trade dress. Christian Louboutin's red bottom shoes is an example of trade dresses protected with trademark law. And finally, trade secrets, proprietary algorithms, customer lists. All these different things are trade secrets that, if you keep confidential, are very valuable. So what are the benefit of IP for startups? I think, you know, we overlook some of them sometimes, but obviously economic benefits, revenue, right? We are able to create licensing and royalty fees that are generated from the asset of which is intellectual property. Now, assets, just like intellectual property assets, just like other types of assets like buildings or fleets of vehicles, you can leverage against that. You can use the asset as collateral from which you can leverage. So you can actually get a loan against the intellectual property assets. In fact, most lenders require that the lender will record a security interest so that if something happens, they can actually create a lien and actually become the owner of the asset. Also, obviously, when you have an asset, you're able to increase your valuation. You know, we talked about in the beginning today, innovative, moats, better, competitive advantage. These are all words that the investors actually threw out. The reason why they're throwing out these words is they want to know that if they're going to invest in something, they're going to have something to sell when they leave. Legal security, not only can you use it as an asset, but it's also a shield to prevent people that want to actually, try to tell you can't use whatever technology. So it not only can be used as a sword to stop other people from competing against you, but you can protect yourself as a shield as well. And also leverage in disputes. When you have registered IP, you have attorney fee provisions for having to file a lawsuit against somebody. You have damages, automatic damages that you're entitled to. And that's a big leverage in order to prevent litigation. And quite frankly, litigation is expensive. It can be time consuming, and it can take a lot of energy away from doing the core business of what the startup needs to do. Then lastly, market differentiation. It obviously helps to differentiate yourself with the intellectual property, marketing advantages. And obviously you're able to lock out the competition so that how you can make more money. So what are the consequences of not protecting IP? Missed funding opportunities is probably the biggest one. If you don't have protected intellectual property, investors may actually think it's a great idea, but they may not want to work with you. In that case, they could just circumvent you and do what they want to do. And also, because you can't lock out your competition, you're going to be able to, not only investors, but also competitors. You may have a great idea, and then someone else says, wow, that's a great idea. I love that idea. Let's do it ourselves and we can do it better. So lost revenue is a big consequence of not protecting your IP. Also, the chilling effect on innovation. What I mean by that is, the patent world actually exists as a monopoly. When you get a patent, you have a monopoly, a legal monopoly for a certain period of time. And the reason why they grant that monopoly is because they want to encourage innovation. If they did not grant the monopoly, people would hide their secrets. They would not share them. They would not publish the information so that other people can use them, and they may not innovate. So without having one of the consequences of not protecting your IP is actually having a chilling effect in innovation. And lastly, damage to brand reputation. We see this a lot. There's a lot of counterfeit products out there. If you don't protect your intellectual property, if someone is using your brand and let's say one of your customers gets a hold of it and they think it's you when it's actually this bogus fraudster, that's actually going to hurt your reputation and your goodwill. So you really need to actually monitor that and police that. So not protecting your IP has some serious consequences. So the biggest mistakes and most common mistakes that we see for startups is really not paying attention. You need to be intentional about trying to secure your IP. And what I mean by that is if you actually do or do not do certain things in certain times, you actually can lose protection. Here's what I mean. In the patent world, if you don't file a patent application before 1 year filing, within 1 year of your first disclosure, you actually are barred from getting a patent. So even if you have the best idea in the world, if you don't act in time, you're going to lose your chance to acquire the asset of a patent. So you need to be careful. And then lastly, failing to enforce your rights has some serious consequences as well. For example, the Murphy bed, everybody knows what a Murphy bed now is, but in the past, it was actually a brand. Because that brand failed to enforce their rights, everybody can now use the word Murphy bed and they don't have any more rights. So big mistakes for startups. Just need to be careful, pay attention. And what should a startup do? Start early, consult experts. What I mean by that is you should know what you may or may not have. If you have certain things, you should try to protect it. It's going to be a valuable asset so you can leverage and hopefully make more money. And that's it. Here's my information. If you guys have any questions, just, please feel free to ask me. Thanks, Scott. Thanks for having me. Saw some great presentations today.
Thank you, Derek. Thank you for being there. Appreciate that.
Before you go, Derek, I have a quick question for you.
Sure, jump in, Daniel.
So one of our CEOs just testified in front of the Coons Committee in the Senate about patent infringement, and obviously it's become a big issue. I guess for the last 20 years, ever since the eBay decision, where you really can't enforce your patents if you're a small company with $2 million in the bank and trying to get there. So how do you see that as far as where the value is on actually getting these patents when you're unlikely to be able to enforce them, when, well, in that case, Samsung just steals your technology and says, "No, screw you."
Great question. So, right now the Intellectual Property Law Association says to go to trial with a large firm, you're looking at, $600,000 through trial for patent litigation, extremely expensive. They are exploring different avenues for small claims litigation, so to speak. But quite frankly, in the e-commerce platforms for certain devices, they're actually having like streamlined processes in which the Amazon platforms actually has what's called an Apex program, where they actually allow you to have an arbitration panel through Amazon. Within 2 months, you can actually have a decision about whether or not it's infringing or not. More complex technologies are a little more difficult, but it's a cost. It's an issue. Interestingly, on the copyright side, they actually came out with a small claims kind of administration or proceeding that you can actually go through. So that is helpful. And there's a couple other on the copyright side. There are other means to enforce your intellectual property. They're administrative, and ultimately you'd have to go through federal court, but it's an issue.
Awesome. Thank you for that, Derek. Awesome. Thanks, Derek, for that feedback. And obviously, you can reach out to Derek for any individual questions or work at his side. He's worked with several folks I know and does a fantastic job. So, well, what I'd like to do now is, now that we've done all our presentation, I'd love to get some feedback from our investor panelists. So what I'd like to do is I'll call on you, or you can jump in. I'd like to get one of you general feedback on what you heard today. Maybe there's a company that stood out, or any tips or advice. And so, Daniel, you are on the mic last, so I'm going to pull you up again, and you're live. Daniel, this is your first time here, so give the entrepreneurs a little feedback about what you heard today.
No, thanks for having me, first of all, and the invitation is nice and good to see such a large group and interesting technologies. Look, it's very difficult to put something like this together, right? Because you have different investors with a whole different set of needs. And so, while one of the presentations was interesting to me, the other ones, not through any fault of yours, were just not going to be of interest, and I don't want to kind of chime in and say my thoughts
Sure.
on a
Fair
phase
enough.
1 diabetes company when, that's not really my place. So, I thought 5 minutes is the absolute right time. You just want to get enough to know whether I want to speak to this person again or not. So, that part's really good. The location of the company would probably help. If you can
Good
kind of
feedback.
say that.
Thank you.
At some point.
That's excellent feedback. It's interesting you say that because the reality is we have, several companies that come in from out of the country. And as you mentioned, David may even attest to this, a lot of groups won't invest in foreign companies, won't invest domestically. So that's really good feedback. Thanks for that, Daniel. I appreciate that. David Friedman, you've obviously been around all these calls for a while. How about some feedback about what you heard today?
Yeah, I've been doing this since 1774 with you, so it's been a long time. I always enjoy this. I found all the presentations very interesting, very intriguing, even if I didn't particularly think they're right for TCA, and we invest in across the board, but I just know what my groups, want to invest in. There were 4 companies that stood out to me. And I'll give a quick comment beyond that. I liked Shopraise for a variety of reasons. I liked THAC, but we have been so well into diabetes care and GLP-1 and other formulations. I think we don't have a temperament for it anymore. I liked Apriority because I thought the debt management made sense. I like Wavere because I think that's a discontinuous innovation, and I enjoyed that one. I like LVED, even though I can't pronounce it, because I figure estate planning makes sense. I can see my son who's in the wealth management area using it. So I've asked some of those to apply to TCA.
Awesome.
And see where it goes. In general, I'll give the following comments. I didn't understand until the end, and even after the presentation, I may not have understood what the essence of the business was. And I'm a big fan of elevator pitches. I need to understand context. It gets my frame of reference. It gets my, who I think your competitors are in my mind, and then I can really actively engage in it. So I would really love to be able to know if it's a B2B play, who your literal target market or your beachhead market is, what's your sustainable differentiation, how are you going to do that? And then talk about the team, which is real critical. We heard that at the beginning. The team, the product market mix are the 2 real drivers of making us really interested. And the only thing you want to do you've heard this before, the only thing you want to do in these pitch competitions, you're not going to get money today, but you want the angel investor or the investor to say, tell me more. And that's the next conversation. And you want it to be intriguing, make it emotional, make it personal. If I had a boat, I would certainly want to clean the bottom of my boat. I get it. My friends have complained about that. If I'm the military, I don't think I'm going to see that device in an aircraft carrier, but maybe that is, and that may be a good market space. But make it, so the point is, come up with a really good elevator pitch related to me, even if it's only a small group of the people, because you're not going to relate to everyone. I'm into everything. Others are into certain other things. But make it relevant. If it's something to do with debt management, ask the question, if you have kids and they're doing this, or if they have a kid having the first house, or if you have an have an older parent that you have to do estate planning. Make it personal like that. That gets the attention and brings it down to a guttural level. Again, TCA Venture Group is open. You're always welcome to apply. I've asked certain ones to apply because I thought they have a higher probability. But take a look at what we do on our website, tcaventuregroup.com. Listen to our TCA Crosswords podcast. That's shameless shilling, obviously, but we don't charge for it. We don't get paid for it. But they may be able to help. And if I can help you guys in any way, I'm more than happy to. And by the way, I'm in Southern California, and half of my mind is on the devastation from the fires.
I
A
appreciate you
lot of
mentioning
my
that.
colleagues and investors got affected by it. They lost their houses or
No, I appreciate that. Yeah, and obviously, my thoughts and prayers to everyone there. Obviously, we dealt with natural disaster not too long ago, and obviously, you guys
Yeah,
are
that's
dealing
right.
with it now. So
Anyway, thanks for letting me participate, Scotty. I always appreciate it.
Thanks, David. So Phil Whitman, Phil, this is your first time here. I'd love to get your feedback on what you heard today and maybe some feedback for the entrepreneurs that presented.
Absolutely. So first and foremost, Scott, thanks so much for having me here. I have to say, David Friedman, very, very articulate. So I am a CPA, and we when we used to do auditing via paper, and yes, that's how old I am. We used to call it tick marks. What I can tell you, I had tick marks next to all the same entities that you mentioned, and most likely invited, to apply to TCA Venture. I will say this, that this is a wonderful thing that you've put together, Scott. I think there's a lot of talent in this room. Obviously everyone has the different flavors that they're interested in. The one thing I always say is you keep going, don't get off the merry-go-round if you're passionate about it. Obviously everyone can always improve a little on their pitch, sort of the examples that David gave, where are you located? Who is really your target market? I would say that, I was going to throw out, for example, with Wave Array. I used to have a boat. I grew up on the Navesink River. It was a pain in the butt having to bottom paint it every year. I now have a place in Treasure Island, Florida. I plan on joining a Freedom Boat Club type of place because I don't want to have to bottom paint that boat or do, anything I used to have to do. So, that's probably another good target market for you guys as well. But in any event, loved what I heard from most folks, and what I'd like to find out from you, Scott. I know everyone put their contact information in the chat. I can just reach out to them and chat with them.
Yeah, what we'll do post-event, Phil, and for everybody on the call. So after obviously we're recording this call, the recording, the intros to all the companies and their presentation slides will be sent out to everybody who's on the call. And then Phil or other investors, you simply reach out to me and I'll connect you guys directly.
Excellent.
Fantastic.
Thanks, Phil, for joining us, Scott.
Thank you. I appreciate that. Ed Lafferty, any feedback you want to share?
Yeah, great presentations. Thank you, everybody. I know it's not easy to cram your whole business plan into 5 minutes, but everybody managed to do a good job. One thing, if I could just ask everybody when they speak, just, I know you practice this thing a lot, and just you have to slow down so everybody can basically hear you. A lot of guys just, I know you think you have to go fast, but you don't have to go that fast. So, take your time, let us understand it. And I think David mentioned this earlier too. Don't get out there with some esoteric comments about your business that people don't quite understand. Try to give us a practical use case of how your business works so we can grasp it and understand it fairly easily. That's kind of how I think too. I'd like to understand it from a customer perspective. It's always helpful for me. I saw 3 plans that I liked today. I liked HighRewards because I don't like the cannabis space at all, but I like the picks and shovels rather than actually investing in the cannabis business. Picks and shovels is the way to go because it doesn't matter. You don't have to pick a favorite, right? So that's kind of why I like that one. Wave Away, it solves a unique problem. I thought that was great. I would definitely want to check the market size on that one, but I know it's a big one and I know it's a big pain in the ass just being the guy that gets under the boat and puts paint on it. I also like Apriority too, because they're solving a real problem and they're taking a creative way to solve that problem, which I thought was fantastic. And I think that, you can actually build on that. Once you start to build out your next generation of the product and it gets smarter, I think it gets more interactive and I think it gets more sticky. And I think that's what they want to do. I like the intro coming through the benefits market. I think that's terrific. So all in all though, everybody, great job today. I appreciate you inviting me, Scott. Thanks.
Thanks, Ed. I appreciate that. Any other investors want to provide any feedback on what they heard today? I know there's a few that are lurking. Whether it be Chris or Brian, I'm not sure you can.
I'll jump in, Scott. I'll jump in. So first of all, I wrote down a whole bunch of things I was going to comment on. Fortunately, everyone else covered most of it, so I don't have to do that anymore. So I'm in agreement with a lot of things that the guy said, Daniel and David and everybody else. I wanted to ask you a question.
Sure.
Do you give these guys a short written guideline on how to get through this 5 minutes effectively?
Yeah, we actually do. In fact, we even do a practice session prior to the event. So what we try to do is that And, we typically have them try to answer a couple of key questions. And obviously with the idea, Chris, that like David mentioned, the goal is to give you guys enough information to want a second call. So, and obviously, for some of these folks, it might be their first or, early time presenting. And so, but the answer is yes. I'll be frank with you. I was at a pitch event in where I am right now in Las Vegas, and it was a disaster.
Yeah. I got to tell you, and I'm going to stop you right there. I do a lot of these, angel groups all over the country, and yours is absolutely one of the best as far as organization, presentations, the deal you bring, the other people that participate. So I just wanted to let you know that. I mean, Keiretsu forums, big angel groups, not as good.
Thank you. I appreciate that.
Yeah.
Any feedback from what you heard today from the companies, or any advice you want to instill with them?
Not specifically that hasn't already been covered. The one thing that I'd like to see them keep in mind when they're pitching is they're not trying to sell us. They're trying to get us to a meeting. And a lot of them, I think, are trying too hard. They're trying to close on the initial pitch. Right. If you could just get them to say, hey, guys, just bear in mind, all you want to do is set up the next step. I think that would help if you could reinforce
Exactly. I appreciate that, Chris. Well, we got a couple of minutes left. I'll take one or two questions before we close out. If you have a question, raise your hand in chat. And please remember, a question is not a continuation of your pitch or an attempt to pitch again. So let me ask you, I'll start with a general question. We're in a new year. Where do you think 2025 is going to be in terms of angel investor? And Chris, you're on the screen right now. I'll start with you, and then we'll jump in with everybody else. Didn't mean to interrupt you while you're having a snack. My apologies.
No problem. It's interesting, especially contrasting it against last year. We saw so much slowdown in things because of a number of factors. Initially it was, which way is the election going to go? And then, some of the disruptions in various segments of the economy and the anticipation of what's going to happen with tariffs. I do a lot of stuff in Canada, and the Canadians right now are essentially, shut down as far as anything that's going on. But my expectation for the next several years, quite frankly, is that we'll see a lot more activity. We'll pick up a lot more. With the fallout in the venture capital industry for the need, and especially where I participate very early, there's a huge need there to get these companies identified, properly funded, and set up for institutional funding. And that's what we as an angel community need to do. So, my anticipation for the next several years, quite frankly, is I'm expecting things to be quite good for us.
Yeah, so I was great comments, Chris. I mean, I was just talking to some of our folks about what they anticipate, because last year was kind of a lower year. And the part of the reason why it was a lower investment year was because of the risk that people wanted to assume. So what I'm hearing, and even though I don't know, I'll have two comments. Number one, I'm hearing that we want to, as a group, move upstream in a sense. We don't want to invest in pre-revenue. We want to show traction in some way, or the entrepreneur to have some traction in some way and minimize our risk as we go forward. And that relates to what we all talked about as the valuation, the value in the investment, not the valuation per se. So if you have good revenue, now we'll look at trailing 12 months, we may look at the next 12 months, and we'll make an assumption on a multiple of what the valuation should be.
Yeah.
The second thing that we're seeing is that we're seeing more and more deals coming through in everything. Almost has AI. It's like,
of course.
It's like the .com in the 90s almost.
Yeah.
So I think that's important to recognize, but it shouldn't be algorithmic. It should be real AI. And I think that there is a good temperament for discontinuous innovation. But by doing that, you have to make the argument, you have to make the analog, and you have to get into the angels' heads why this is an on and off switch, that you can literally, if you invest here, you have a high probability of success because the team is in place, the advisors are in place. You can use the CHIPS Act, you can get grant money that reduces our risk. And that then hopefully, even from an angel point of view, that somebody else smarter than us has done the due diligence, or at least we can leverage that. Maybe it's Expert Dojo, who have a high regard for Brian and his crew. or maybe it's Nathan McDonald in Koretsu Northwest. They've done a pretty good job. If you want to check out next week or the week after, I'm doing a pitch on the top 10 technology and healthcare trends. I'm going to do a quick review of it on my podcast tomorrow.
Awesome.
Check it out. And I'll make an offer to you somewhere down the line, Scott, if you ever want me to present it. I do it every year for TCA.
I'd love to. Yeah, let's put that on the calendar. So we're breaking news. We're going to be doing a podcast with David Freeman. So
anyway,
breaking
thanks
news.
good best wishes to all of you online, by the way, entrepreneurs, investors, and I hope to see you all again.
Awesome. Any other feedback before we close?
Yeah, well, just to follow on that, I mean, like 2024 was a very difficult year as far as growing your company. It was a terrific year to invest, right? Because the valuations were low. And basically what I believe happened is in 2020, 2021, when, someone like Tiger came into the game and just dumped a couple $2 billion into the industry with no thought process and incredibly high valuations, it led to a bunch of companies that were really struggling to get their next round because no one wants a down round and no one wants, to admit that, the valuation wasn't really commensurate with what their actual ability was. I mean, we just actually invested in a former Tiger company just because the valuation was, 25% of what they invested in. I mean, it was still a terrific company. So it's really the focus on operations, focus on, getting your business right sized and make sure you have the right number of employees, that you're not, just because you raise $5 million doesn't mean you have to hire 40 people in order to, build up this huge team. You have to do things smartly and think about the long term, understanding that the next round is not always there, and especially is not going to be there if you don't perform.
All right. Awesome. Thanks for that. Any other feedback, Ed? Any feedback you want to provide?
Yeah, interestingly enough, we always try to pitch our venture business as being unrelated to the public markets, but 2024 kind of showed us that we're not, right? Because a lot of people were diverting investment into venture deals to go into the public markets because they didn't want to take the risk. They're like, why do I want to put money in a startup when I can get 20%, 25% investing in a public fund, right? So it's like, and it's hard to argue with that, right?
That's a great comment, Edward. I totally agree. We're hearing that all the time from our members.
Yeah, so let's just hope, I don't want to hope the rates go down, but let's just hope that they get, that people's appetite for risk starts to come back into line to what it used to be pre-2024.
Awesome. Thank you, everybody. We're going to wrap it up because we got a hard stop here, and frankly, it's lunchtime in Vegas, and I'm starving, and I want to go to my favorite Thai restaurant. So
sounds good. Safe travels back home, Scott.
Thank you. With that, I want to thank everybody for joining us today. Thank you to our presenting companies, our investors, and as I close all the time, if there's something you didn't like, tell me. If there's something you love, tell everybody else. And with that, I wish you all the very best, and we'll talk very soon.
Thanks, Scott.
All right. Take care, Scott. Everybody, take care. Bye-bye.
Thank you.